Hello, everyone. Jason here with Levelhead Trading, giving you my analysis on Tesla today, Thursday, March 7th. So, jumping in here on the daily chart, we have a little bit of buying here, but could not even get over the highs of yesterday, which was 181.58. So the high we got today was 180.04. But I'm just going to really be talking about the big picture, what I see. Um, when you go back to this area here where we gap down, we had the daily RSI down to 17.43. One thing that I've picked up on in my trading is when you get that extreme on a particular time level, then that means you got to look to a bigger time frame than the one that you're looking at. When you get that extreme to 17, then in my opinion, most likely, then you got to go to the next bigger time frame, which in this case would be the weekly chart, and see where you stand on the RSI there. Are you oversold on that? So when I go to the weekly chart, you're going to see that we're not oversold on the weekly chart. So to me, that would be the next logical area of trying to bottom out is getting oversold on the weekly chart, since getting oversold on the daily chart did not do a thing. All it did was give you a fake out where you had a trend change here, and then you stalled out right at this level here at around 205, 206. And what I said about that was on the weekly chart, that looks like a weekly bear flag if you can't get past a 38.2 retracement on this most recent pullback. So now, really, the most important thing now is going to be on the weekly chart, following that, and taking a look at the daily to see when do we have when does it finally show in the smaller time frame the next daily uptrend, because we are not in a daily uptrend anymore. We lost that. So on the daily chart, I'm going to go back. One of the things as a trader you need to do is find something to base your opinion on if you're going to start buying something. So you need levels of support to work off of, so that when you make a trade, which all trades are risks, but you need to mitigate your risk, you need to have a better reward than what you're willing to risk. But if you look at this chart on the daily, you have no nearby support. Over here, you had support that was established for a short time. But as I said, during this period, you need to use this low. Now, actually, what I said was you need to use this low down here if you were going to enter up here and hope that this will continue in an uptrend. If you were going to buy anywhere up here, then you would use the low down here, because you had a little base of support for a little while. So if you were buying here and you're anticipating, okay, maybe we will break through this, get up to the 200-day moving average, which is what I was saying. If I didn't have any positions, I would buy, but I'd have to use this as the stop, which was 189. So on this day right here, that's when you would have gotten stopped out. You would have gotten a small loss, and then you would have your capital back. So now, what do you have as support? There isn't anything to base your decision on nearby. You have to go all the way back to this time, which I pointed out before is back in April. In April of 2023. And if you notice, which I mentioned before, you have this area here where there's a gap. So for a little brief period here, you filled that gap up, right? That was between 177.65 on the low side, and on this one, on the high side, it was 169.70. So basically from 170 to 178, you have this area here that typically gets filled. So it got filled right in this time frame in May of 2023, and then that was it, and you took off. So this is where we are right now. We're at 178.65, which is slightly above the low of this particular day here, which was 177.65. But if you notice on my screen here, this is the after hours. This is the after hours price. Now, this doesn't really tell you a lot, but when you're in a pretty strong downtrend and you had a little bit of a pop today of 1.2%, but in the after hours, it's already back down to 177.70. So that's not showing any kind of strength. And so going back to finding an area of support, the only area of support you have left is this block all the way back from last year, but that was a long time ago. So there's not too many people, except for somebody like me, that would look that far back and say, okay, I'm going to buy here at this price because back in April of 2023, we were in this price range. So that's all you have. That's the only thing nearby, and it's not nearby. You got to go all the way back to April of 2023. Typically, you would use a support that's nearby when you're trading this area here. So now I'm going to go on the weekly chart and show you what that looks like. Like I said, on the weekly chart, you're not oversold yet. Now on the RSI level, you are at 37.46. And we have one more trading day left. And if you were to look at this candle, the low of that candle was 173.70, which you already broke that low that I was counting on before, which was 175.01. So you already broke below that, and there's no sign of any buying. If you just look at this candle, it's all to the downside with just a couple of dollars, from the lows. So that's another negative in favor of the bulls. And so now, again, looking at this, you got to go on the weekly chart. Same thing. You're going to get right back into the area that I was talking about of 2023. And that's where the low at that point was 152.37. So if we pull back more and more, then we're going to eventually get oversold on the weekly chart. But, is this going to hold? That's the next question. 152.37. So, you're just going to have to be patient on this. So if I didn't have any positions, I sold most of my positions. I am still holding about a third of what I originally bought because one of the things that happens to me is if, let's just say, all of a sudden something happened and the price just took off and went up to the upside, well, then I'd be reluctant to buy because I was like, I should have had something down at these prices. So when I believe in the very big picture that I will eventually, have some really nice gains, if the bottom, in my opinion, is not extremely far away, then I will hold on to a small little position so that I don't have fear of missing out in case all of a sudden something happens tomorrow and it takes off. But I only have about a third of what I really want to own right now because everything's telling me it's going to go lower. And this is going to be a real big test, getting to that 152. So again, we're not oversold on the weekly chart. So that's the next thing I'm looking for is getting oversold on the weekly chart. And then let's see what happens on the daily time frames. If we then finally bottom out, have a nice pop, pull back, set a higher low, and then you have something to work with to make a decision as to where you want to enter and how much you're willing to risk. All right, sorry I had to pause it. Somebody came home, so I had to attend to that. All right, so on the weekly chart, that's what it looks like. This is the last area here, the 152.37. And I'm going to go to the 2-week chart and show you the 2-week candle. So the 2-week chart this week, if you look at this candle, This is the full 2 weeks. So tomorrow, this candle will be complete as far as the 2 week candle. So again, you look at the 2 week candle, 2 weeks, and where is it pointing? It's straight down. It's straight down. And I can go in the smaller time frames, but you can see it right here. When we had that little daily uptrend that lasted for about a week and a half or 2 weeks, this was the high that you got, 205.60. And again, here is the EMA. I like to use the 12 period and the 26 period. Here's the EMA crossing underneath, which is a negative sign. That's the 12 period. That's the most recent. That reacts the fastest. And notice how it got close to it and it rejected right off of it. It didn't even touch it, but that just is another symbol, another indicator telling you, that that's a hard rejection. So that area, as I mentioned, 205.60, that's resistance. That's a hard resistance, because if you look at this week here, this 2 week, you got up to 203, and then on this week you got slightly above it to 205.60. So a month of action within these two candles, and you couldn't even get over that $205. So that's kind of a line in the sand as far as the upside. I think in time you'll get over it, but that's a wall right there. Because, like I said, actually, this is a month and a half, 2 weeks here, 2 weeks here, and 2 weeks here. So you got a month and a half, and there's just a block that you can't get over. So again, on the 2 week chart, that's how it looks. And I did mention the 200-week moving average. So let's say we do pull down to this 150 area approximately, then we would definitely be oversold on the weekly chart. And if it takes, 2 or 3 more candles, which would be a month and a half, then this, like I said, would slowly be coming up, unless you just crashed right through it immediately, which I highly doubt that'll happen. And so to me, that's what's lining up. The 2 week chart looks like the chart to look at as far as support. That's the only thing I can see as support, because you held it right on this very extreme pullback back in January of 2023. That's when this took place, 101.81. So you went from 101.81 to 299.29, and now we're giving a majority of it back. And the last point I want to make is I talk about Fibonacci retracements, or if it's the other way around, how much you retrace back to the upside. But in this example, I'm going to be doing how much you've given back. So from the low of that 101 to the high of about $300 approximately, we've already given back 61.8%. So I like to use Fibonacci retracements a lot. That's a new thing. I've heard about them, but I never really used it in this manner, putting it on the chart where I can clearly see, how much have we retraced. So this line right here is the 61.8 retracement that you gave back from the low to the high, and we gave that back. Now, if you held right here and you didn't go any lower than maybe 1 or 2%, then that would be a good sign as far as the big picture setting the bottom. And then if you then popped up, then I would anticipate that then you're going to be in a very long, drawn out equilibrium, because you're not going to go up to the highs at any time soon. And if you get a really good push, then you would get somewhere in the middle. That's been my experience. But you have to hold that 61.8 retracement, which would be then most likely forming an equilibrium. So on the bigger, if you only retrace 38.2%, which is right here, that is about $225 from the high of $299. If you only pulled back that far, then that would constitute a bull flag, using the 2-week chart or the 1-week chart. That would be a bull flag. If you held that, and then that would be more likely that you would eventually get to higher highs. But when you give back 61.8%, but no more than that, then the most likely result will be an equilibrium. You have a big, big pullback. You hold that 61.8, and then you go up and you work within that range from the highs to that drop of 61.8. But anyway, I'm talking about that too much, but it doesn't look like we're going to hold that 61.8. So it's going to be a bigger pullback. And the next Fibonacci number is 78.6. So that comes down to $145. So that would line up with what I was talking about, where if you get oversold on the weekly chart, then that's going to line up close to the 200-week, the 200 moving average, which is down here at the moment. And it would line up with retracing all of 78 point, what's that number? 78.6. So that's what I see. That's what it looks like to me. Again, on the 2-week, you're just about finished after tomorrow's action that will complete that candle. And as I said, just in a little glimpse of something, here's the after hours trading, and it's already showing, more weakness, 177.87. And the last point I want to make is the overall market today, the technology, QQQ, which Tesla used to trade in sync with QQQ, and sometimes it would outperform, it would be the leader in QQQ, but now it's completely reversed. QQQ is at all-time highs, and it had another really strong day today. It was up 1.55%. Tesla was up 1.2%. So Tesla's been crushed, and even on a really strong day, this is QQQ, it's on a very short time frame, but we're at the all-time highs. And that's what I was talking about was, if QQQ starts having any pullback, then what's going to happen to Tesla? What's going to happen to Tesla? QQQ is long overdue for a big pullback of at least 5, 10 to 15%. This is what it looks like on the weekly chart. Just give me a minute here. There's QQQ. There's QQQ. So QQQ on the weekly chart, talk about extremes. It's at 74 on the weekly chart on the RSI level. So if QQQ pulls back, which it's inevitable, then what will happen to Tesla? And like I said, Tesla, even on a day where QQQ had a really strong day, making all highs, Tesla didn't even move as much percentage-wise. It only went up 1.2%. So anyway, that's my analysis. I appreciate the new subscriber, whoever that was, and hope I get some more. And I'm going to try to catch up and make videos on some of the other things that I have made videos on. Bitcoin, maybe, and the Chinese, but it didn't seem like anybody was interested in that Chinese one that I made a video on, the FXI, but I'm still eyeballing that. It's kind of similar to Tesla, but I think FXI, it does have a base of support. And what's the other one? Boeing. So Boeing is holding right around $200. It's just not going anywhere. Maybe that's the bottom. It's hard to say because there's been no substantial upside, but it hasn't gone much lower than about 196, which was an area of a gap fill that it has filled, but it hasn't left that area. It hasn't really taken off yet. But I do have a position in that. That's also a long-term one.